Well, gang, it's another good week to be a buyer in the Los Angeles housing market. Don't get me wrong, overall it's still way better to be a seller. But as the off-season gets underway, the metrics are looking good for buyers. Let's dig in. I'm Jon Schwartz, a house hacker, investor, and realtor in Los Angeles, California, and you're watching House Hack Los Angeles, a channel about winning in the Los Angeles real estate market. This is my bi-weekly market update for September 14th, 2021. Each week, I review the week's MLS activity for Los Angeles County to bring you the latest in what's happening in our market. These numbers come straight from the MLS, and you won't find these graphs anywhere else because I make them. If this is your first time watching the update, here's a quick explainer. Each graph covers the previous 12 weeks. The bars represent actual weekly numbers, and the line represents the 4-week trailing average. This smooths out the noise and helps us identify trends. Now, let's get into this week's data. Looking at single-family listing activity, the net new listings 4-week average is at its lowest point in 3 months, and we should see this continue to drop into the winter. Low inventory is typically bad for buyers, but in the off-season, the winter months, we also have less demand, i.e. fewer buyers. So even though inventory falls in the winter, because demand also falls, we see more favorable pricing. And that's what we see in our single-family sales indicators. Average price per square foot is trending downward, days on market is trending upward, and sale price to list price ratio is right around 100%. After a blistering summer, these indicators show that the market is beginning to even out. A little bit. Look, this is still LA. This is still one of the toughest real estate markets in the country. But at least we're entering the off-season. In condo listing activity, the net new listings 4-week average is down from 3 months ago, but trending upward. I expect condos to follow single-family homes and see inventory clamp down further as we head into the winter. In condo sales indicators, we again see a market that's shifting to favor buyers. Here's something interesting. The average price per square foot took a big jump this week from $614 all the way up to $658. However, at the same time, sale price to list price ratio fell from 101.6% to 100.3%. What does this mean? Well, in effect, these two metrics cancel each other out. Some very expensive condos sold this week, but at a discount relative to their asking prices. Digging into the sold listings, I found 9 condo sales this week that sold for more than $1,000 per square foot. But only 1 sold above list price, 3 sold at list price, and 5 sold under list price. So yes, some expensive sales drove up the average price per square foot, but really, most of those sales underperformed. And notably, the median days on market 4-week trailing average is at its highest point since May. In residential multifamily listing activity, and remember we're talking about 2 to 4 unit buildings here, new listings have been falling for 5 weeks straight. Keep in mind that multifamilies are mostly bought and sold by investors, whereas single-family homes are mostly bought and sold by families. So while families are very active in the summer while school is on break, investors are generally less active in the summer because it's vacation time. However, with the Biden administration's proposed changes to the 1031 exchange, I think we should see multifamily inventory grow as we approach the end of the year. As house hackers, this is something we have to keep an eye on. In multifamily sales indicators, average price per unit is down, that's good, and median days on market is up, that's also good, but sale price to list price ratio is unusually high at 104.38%. I looked into this week's sales, and this high ratio is entirely attributable to a single sale in Eagle Rock. A teardown duplex that was listed for $599,000 and sold in 11 days for $900,000. Clearly, a developer knew what that piece of dirt was worth and came in strong to win it. And lastly, looking at LA County Vacancies as reported on Apartments.com, I'm again surprised to report that we have another drop to 33,024, bringing the 4-week trailing average to 33,518 vacant units in LA County. This number has been dropping all year, which is great for landlords and house hackers, and I've been bracing for the bottom for months now. We can't get much lower than this. In next week's video, I'm breaking down how to get started with house hacking. If you're curious about a smarter path to home ownership in Los Angeles, check out this video about house hacking, or this video about how I can help you buy and renovate a duplex. See you next week.